Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Stick on today's show. The earnings parade. We have big drops in the video game industry this morning. EA, Take-Two, Activision Blizzard, all getting hammered. Going to talk about those. We're going to talk about earnings from Snapchat and Disney and Spirit Airlines and Humana, Spotify, Michael Kors, however many we can get to, we will get to as many as that is. Our guest today at 8:35 will be joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, to break down the earnings for us. Joel, what is the good word here in the overnight session on my brand new fancy schmancy update trade station charts?
Looking nice there, Spencer. S&P futures are trading in the red by two handles at 27.29. Your high close for the move at 27.31. We'll be keeping an eye on that. Yesterday's high, 37.75. Pre-market high is short of that, so there's a good target on the upside for longs. Coming on the downside, not much here, folks. You have Monday's close at 21.25 and Tuesday's intraday low at 22.25. So there's your support. Tight range. The daily ranges have really been coming in. Nice consolidation here near the high of the move. Crude is flat here in the red by a couple pennies here at 53.64. Kind of in the middle of that 53.5 to 55 trading range. Gold giving back some, down $1.80 at 13.1740. Silver in the red as well by nearly a dime at 15.74. We got some stocks going in both directions. Let's bring in Triple D. I know he had a busy after hours and having a busy morning, but taking some time out. Dennis, how you doing?
One of those days. Meh.
Yeah.
It's gonna be one of those days. You know what? It's gonna be one of those days. And I don't complain about my sports teams that much. Obviously, we like the Lions, who have been terrible forever. Tigers had their chances, got the World Series twice. The first one, they couldn't throw to first base or third base. Remember, the pitchers throwing the ball away.
Yep.
Yeah, and the last one was just a debacle where we were the favorites, and it was the San Francisco series, and we'll just forget about that one too. And basketball has never been my thing, so I'd say I'm a bandwagon basketball fan. If the Pistons ever get good, I'll probably start cheering for them. But the only Detroit team I do not cheer for is the Edmonton Oilers. And it's probably because Gretzky, when I was a little kid, I had the Gretzky lunch pail. I can't remember. I was so young. Hockey's always been my thing. It's Canadian. It's like my loved sport. And the Oilers have been bad for so long. So last night, I'm like, they're playing pretty good. It's 2-1 going into the third. I'm like, okay, well, maybe we're going to get a win here. 2 minutes, within 2.5 minutes, they're down 5-2. They allow 4 goals in 2.5 minutes, lose 6-2. They're up 2-1 with 15 minutes to go in the game and lose 6-2. How is that even possible?
Is that a record for 4 goals?
Well, it's not for them. They've had more futility than that. But, I mean, it's just so I guess I just cheer for the losing teams. Anyways, that's just – they're almost like they've been bad for so long. They had the dynasty back in the 80s where they won all those cups, 5 cups in 7 years. In the last 10 or 11 years, they've been at the very bottom 4 times and near the bottom probably 7 or 8 times. It's like the anti-dynasty. Like, how can you, be that bad for that long? Eventually you're going to come up into the middle of the pack, you'd think. They're like 3 points from the bottom again with the best player in the world. It's unbelievable.
All right,
anyways, the management, sewered the team. Shirley sewered the team. I don't complain that much about my hockey team, but I felt like complaining because I'm already
That's okay.
Felt like complaining because I'm in a ticked off mood from the 6-2 loss last night when they had a 2-1 lead in the third period. It's unbelievable. And then you come in, and obviously, your trading day is probably not going to go well because your sports team puts you in a bad mood. I come in. I just happen to be long Match.com because they report tonight. We know I often buy stocks ahead of the reports because there's usually a positive alpha there. Well, Deutsche Bank said screw your positive alpha, Denny. We'll downgrade your stock. So Match.com gets downgraded here today. So I've already dumped some of it here this morning, but wow. Just bad luck again. Every morning I come in, it seems like I get something random hit with bad news. I mean, that's completely random. The Deutsche Bank's downgrade. I owned it because I was planning on selling it, obviously, today ahead of the report. But usually these stocks trade up ahead of the report. And you're going to come in. Sometimes the news is going to work for you. Sometimes it's against. Like I said, in January, I felt like the news was working. Maybe it's selective perception, but I felt like the news was working against me every single time. I come in this morning. Yeah, I got one stock that's killing me, and the new random news is against me again.
All right, just that Match.com. Now, this is the second downgrade in the last couple of days, if I recall correctly. Rebounded from the first one, and I don't know about this one, especially with the report coming up. It's kind of printed all over the place. I know you don't want to talk about that 50.01.
We can talk it twice. Yeah, I don't know who's selling it down to $50 twice. So at 4 o'clock in the morning, somebody sold this all the way down to 50.01. And then they decided again that they had to sell it down at 7:16 this morning. They hit it down to 50.01. So I'm not sure what that's all about, but come on, it ain't going down 10% on a downgrade. Anyways, it's back up here at 53.60. I slept in today because I was watching my terrible team lose last night, so I didn't get to participate in buying the stock. Obviously, it wasn't many shares, 800 shares traded down to 50.01, but talk about throwing away at least $2,400. So the thing is already in the 53 handle here. That's just ridiculous. It's not going that low today. Maybe after tonight, but it's not going that low today.
Well, the only thing the little bit of hope I can give you is the downgrade came on Monday. It opened up at 51.76, bottomed right at 51.50, and then rallied back to close at 54.43. So
I won't be around that long. I'm not in trades for hope. And this is, this is something that I do differently, and I believe I do it correctly, and a lot of people don't, is that when they get on the wrong side of a trade, they're going to hope that thing comes back. I'm not in the trade for hope. The news is against me, so I'm going to eat my loss. And I will be selling this morning, probably in the 53 handle here. I've sold half of it already in the 53 handle, so probably going to be getting out of the rest of it too, because you know what? A downgrade, random downgrade, is probably worth 3%. So it's priced correctly for its new information. I didn't have that information when I bought it yesterday at the close. That information obviously wasn't out yesterday at the close. It came out this morning, potentially last night, but it didn't come out at 4 o'clock. So you just got to, eat those losses. When the news goes against you, you were in it just for a trade, you got to work out of it. I mean, I was in it because usually these things trade up ahead of the report. It did trade up a little bit yesterday. Obviously, I guess I should have bought it 2 days ahead of the report on this one. But a lot of times I only buy them the day ahead. And in this case, that's what I did. And in this case, I got a downgrade working against me. So you know what? I'm going to eat the 2-point loss.
Okay. All right. Let's move on.
What you got to do?
Move on. That's
don't hold on to those losers, guys. Don't hold on. You don't stay in business. Hold on to losers.
All right. Now let's move on. There's a lot of earnings.
Wow, we're gonna go.
Let's just rip them. How we want to do it.
Okay. So I have a Russell 1000 filter running, showing me top stocks in the Russell 1000 and the bottom stocks in the Russell 1000. Guess the top 3 stocks. I already told you guys in the previous.
Yeah, you already told us.
Top 3 stocks on the Russell 1000 being down. So down the most out of the Russell 1000, EA, Take-Two, and Activision Blizzard. Thank you very much. Fortnite. Annihilation for all 3 of those stocks. And you know what? Like EA, comes out last night and absolutely gets destroyed. I saw CNBC had Pachter comments, which we should try to call Pachter and see if we get his comments too. But they already said last night, Pachter said they got destroyed and they deserved to get destroyed. So EA, terrible quarter. Own that in my long-term portfolio, so not a good day for me on that. I was looking to Take-Two, and they hit it originally, and then they started buying it back, and I was like, you know what? I even tweeted this. I'm like, they set the bar so low that if Take-Two can even come in line, it could potentially rally because EA set the bar so low now. Well, obviously that bar, the low bar that they set, they managed to go under at Take-Two by lowering their next quarter's guidance significantly, lowering the fiscal year guidance significantly. When you do that, you're going down no matter what. And then the third one, poor Activision Blizzard, they didn't even say anything, but it doesn't matter because they're gaming stocks, so they're down 6%. Poor Denny's portfolio there too. They have that in the long-term portfolio too. These esports stocks are not good.
All right.
Fortnite.
Yeah, let's start. I guess we'll do both numbers while we're together, and then we can go from there. But let's start with the Take-Two report. So Take-Two was this morning, TTWO, and they reported their GAAP numbers. Their GAAP EPS, $1.57 versus a $2.74 estimate. I don't think if that was a GAAP estimate there. The sales, GAAP sales again, $1.25 billion. The big number for Take-Two though is their guidance. They guided in the current quarter a net revenue range of $530 to $580 million. The estimate was at $609 million, so very light on the upcoming sales guidance. And the GAAP earnings guidance again, 67 to 77 cents was the range they gave. 84 cents was the estimate there. So big misses on the guidance for Take-Two. And as far as EA after the bell yesterday, you mentioned it, Dennis. Q3 GAAP EPS 86 cents. Total sales $1.28 billion. Fiscal year 19 sales guidance coming in a little bit light, $4.8 billion. And that's all light essentially. So we're light across the board.
I mean, what can you say? It's Fortnite. We know what's eating their lunch. It's been eating their lunch. It continues to eat their lunch. This game has just been hot, I feel like, forever. You'd think eventually it's going to cool off, and some of these they're going to come up with other games, but everybody's playing Fortnite. So they're all playing that one game. That means they're not playing the other game makers' games. Also,
do you remember that they had that big release, Battlefield 5, that they had delayed specifically until November?
This EA?
This EA, you're right. They had delayed that a couple times, I believe, and they released it in November. That was their big game, and that did not perform up to expectations. They sold 1 million fewer copies than they had expected to sell. So they sold around 7 million. I'm sorry, they were expected to sell around 7 million. They sold around 6 million, and that was their big release in the holiday quarter, and that did not perform.
So both these stocks, EA is actually challenging its November or December lows, and potentially going to take it out here today. It's right down there, not quite there, 73.91. Take-Two is taking it out.
Yeah.
So Take-Two got down back actually November 97. We're down at $94 this one. We are rallying a little bit here on both those stocks. We are off the lows, but man, the carnage is incredible here. Take-Two has been resilient. It's been the best of breed. It's been the one holding up. Can it get back and reclaim the 94 area or the 90? What's that low, Joe? I'm trying 97.57. Get back up over there, reclaim it. Maybe you got a case, but there's probably better spots for your money talking against my portfolio, but this is just not good. I'm not adding to these.
You know what this Take-Two kind of reminds me of, and this is people have been listening to the show for a while. Remember what were there was Triple D, it was SSYS, there was Voxel Jet, and I don't know, was there another 3D printing firm?
Yeah, but those companies didn't make the kind of money. They weren't trading with multiples like.
Well, I'm just doing it from the perspective that remember Triple D got up to 100 and cratered, the Voxel Jet cratered, excuse me, but the SSYS just kind of like hung up there for a while. I don't know.
And then it eventually cratered too. Right.
Yeah, that's what I'm
the laggard.
Yeah. And I mean, it's after the fact, Jack, but I mean, if this Take-Two is going to do anything like these other two stocks, did, I mean, you are taking out a major low at, the former low of the move. I'll just give you just because it's down so much, it'd be hard for me to short it. Pre-market low is 91.20. Last two brackets, someone stepped up at 92.35, and I see a monthly low in the stock at 91 and change. You got to go all the way back. Where do they see? 91 was a pre-market low, but 92.81. I'll keep an eye on that. It's $1.20 away. That was your April low from last year. Always a better place to cover a short. If this thing goes into rally mode, Dennis, you mentioned the former low of the move, which it hit on a couple occasions. Use 98.50 as a potential resistance here. But stock finally acting like its peers did. EA right back at the low of the move.
Yeah, I was up in this. I guess I should have booked the gain before the report, but you stuck it in the long-term retirement account. You're not supposed to be trading that stuff, so I'm trying not to. If it was on for a trade, I probably would have sold it, but it wasn't on for a trade. It was in the long-term retirement account. I hope it's still going to be okay in the long-term retirement account. But right now, that long-term retirement account is not happy with this quarter.
74.70 was your pre-market low. You have a daily low at 74.38. So you have a little confluence there on the lows. If you go into rally mode, who knows? I mean, this thing is really struggling at this point. Buyers can't even take it any higher than 78.76. So use 79 as resistance, and Fortnite rules the world here, I guess.
What it is.
And then
you know what the other major concern here is? Take two analyst coverage. I got 22 buys, 4 holds, 0 sells. EA coverage. Let's go check that out too. I'm just going to go grab it. EA, I've got, just grabbing it. EA, it's going to be a similar story. 23 buys, 11 holds, 0 sells. What's that telling you? Analysts got some work to do. That could be some downgrades coming. So we know when these things start getting downgraded, it starts to get uglier yet. So more reason not to own these things. I'll probably stick with them in the long-term retirement account because I'm trying, like Activision Blizzard, and Michael Pachter was on our show and thought it was a double in 2 years. The one thing that they do maybe even better than all of them is this in-game purchases. They call them what do they call those things, Spencer, when they're buying stuff in games? The word for it.
Yeah, no.
Upgrades?
No. I know what you're thinking of, and
Anyway, it's like $4 billion or something on last year, like selling stuff in games. In game, there's a word for it. Skins.
Skins.
Thank
you.
I was going to say that.
Thank you.
Anyways, I'm not sure who was on Fast Money last night saying this, and I didn't know about this, but I want to research that further, and it's a good point. And they were saying Activision Blizzard, makes a lot of their money from skins, and EA doesn't do that as much. So I didn't realize that. It makes me like Activision Blizzard better. I'm a big fan of these in-game purchases. I mean, this is just gravy because, you get a better sword. We can buy it right now. Or you can get this, or you can buy it right now. I mean, there's so many, ways to make money when you get those in-game purchases going. So that's just a huge revenue stream, and it's just pure cash. Like there's nothing like somebody buys that. It's like 100% of your margin. So, I mean, that's awesome if they can continue to obviously make money in those ways. Gaming is not going away, guys. And that's why I'm still think long term. I think you're okay in these, especially I like the Activision Blizzard better than any of them. I always did. I have a bigger position in Activision Blizzard than I do in EA. But that being said, they're all in the gutter until this Fortnite starts to slow down. These things could stay in the gutter for a while, so I think you get them cheaper.
Activision Blizzard reports earnings next Tuesday.
I feel like selling it.
Next Tuesday.
I'm trying not to sell it.
After the bell. Remember what happened last quarter. Remember that they guided lower last quarter. Their Q.
Well, the bar is really set low for them now. The bar is it's like a limbo pole, and it's like so low, and they get to go, it's not unlike limbo, they get to go over. So that bar is literally sitting on the ground. So if they can say anything okay, maybe it could rally here, but I don't know. We thought Take-Two, I thought Take-Two, the bar was up pretty low from EA last night. Obviously not the case.
I mean, if you look at that daily chart of ATV, that gap down, that was their last earnings report. So
these things have not done good ever since Fortnite. Well, look, they topped out, and that's when Fortnite was at its top. Fortnite was the hottest. Fortnite just not going away. The kids love this game. I was randomly playing golf with a kid back in like October, a young kid, like it was like one of those, I can't think this one. I was up too late watching the Oilers games, but it's best ball tournament, and it was like a family best ball tournament. And this was a friend of a friend, so I'd never met the kid, and I was just talking to him. He's 12 years old. And I had to ask him, you play Fortnite? He's like, oh yeah, we all play Fortnite. He says his entire class plays Fortnite. So, this was back in like October or September or October. So I was like, did you ever win? He's like, I won once. He's like, I won it once, the whole thing. Because he won, you're going against 100 other players. It's like, yeah, I won it once. So
Triple D, would you, coming out of the Google chat, would you add to any of your long-term positions?
No, there's no reason to right now because if anything, I would actually try to get out and get back in cheaper. But I don't want to try to I bought these knowing the Fortnite thing's out there. But Activision went from 80. I'm in Activision from $49 or something. So I'm not in it at 80. So I bought it knowing that this is the reason it's been going down. I kind of thought, okay, well, it's been priced in. Obviously, it was not the case. I bought EA just recently as well, back in I think October, and when it got down into the 80s. And obviously got into the 92 and I was making money. Now it's back down to 70, so I'm losing money here again. but it was $150. So I just kind of thought it was cheap in the fortnight. That being said, I don't know if I wasn't in it, would I start a position in some of these? Maybe, but I don't know if you have to just run. I don't think they're going to bounce back like a lot of these others have. You have two stocks reporting disappointing numbers. They spooked, the industry spooked. The PEs aren't super cheap. I mean, it's not like these things are trading 10 times earnings. They're still trading. If we go to Take-Two, we go to EA. EA's trading 18 times. So that's, yeah, but then earnings estimates are coming down. So that's going to bump up a little bit here because they just lowered guidance a bit. And then Take-Two is trading on a trailing basis 34 times, on a forward basis 19. But again, those forward estimates are coming down too. So it's going to be like mid-20s, probably 25, 26 on a forward basis. Say that. They're not cheap. So, and they've obviously got a long term. I'm a big believer still in gaming, not buying the physical games, but just, this online competitive. They're going to come up with better games as well. And I'm a big believer in esports too. So I think long term, I think I'm okay here. Short term, I see no reason to come in and start adding to these things right now because they're completely out of favor.
All right, let's do a good report here, and probably one of the most shocking reports to hit Wall Street in a while. Snap. Spencer, give us the report on Snapchat.
Yeah, this one's interesting here. So I guess on the headline numbers were okay. The Q4 adjusted EPS, a 4-cent loss versus an 8-cent loss estimate. Sales of $389 versus $375 million, and their Q1 sales guidance was in line. But their daily active users were down on a year-over-year basis, 186 million last quarter versus 187 million in the same quarter of the year prior. DAUs are their biggest metric, down on a year-over-year basis, not great. But then again, their EPS and their sales beat the estimates. So talk about low expectations. They beat low expectations.
That's just it. Snap in the gutter. We saw the Facebook rally on disappointing numbers. If Snap was going to do anything, it was going to go up. I was so biased to buy this ahead of time. I never do this, but ahead of the report, I littered the book with bids in the sixes because I thought maybe, they come and they miss a little bit, but I think it's going to bounce right back if they miss. It went straight up after the report. So I obviously should have just bought it. So I was very biased. I was like, I even was saying it to a buddy. I was like, if this thing misses, I think it bounces back. If it beats or it does something okay, it's going to fly. So I think it was a heads you win, tails you win. Wish I was said on the show yesterday, but I didn't really think about it. And then I was analyzing it at the close, and I was like, man, I want to own that. And I wish I would have had a little dip because I would have bought some of the sixes. Didn't happen. And obviously it goes straight up now. So that's just a matter of, we saw Facebook going up on disappointing expectations so low, bar sets so low, and short squeeze. The short interest is really high on this thing. So it's set up really well to be long in the report, and the longs are getting rewarded.
Oh boy, Street was leading long into the report. I'm not sure what our gap down day was here. What we should check. Spencer, when I'm going over the technicals, can you check to see the news for January 15th? It went from 654 to 564, and then it just started to march north, filled the gap easily, broke out over $7. We're pausing here. I mean, I don't want to say the highs in because we did hit 888, 890 on a couple brackets, but we're only at 868. So no one's really whacking it yet. I'm just going to use the $9 level. I went and looked on some of the dailies, and I see a pair of highs at 906 and 911. So there you go. You haven't been back there since September. So we'll see. I mean, the sellers have not, they're just selling on strength right now. They're not worried about taking any profits yet here. So, man, we'll see what happens at 906, 911. On a pullback here, man, I don't know where to buy this thing on a pullback. Dennis, any
No, I'm not in. And long term, I don't like the story. I've said that. Long term, I still don't think Snap has a good story here. This was just simply a quarter that the expectations were so low. Let's squeeze the hell out of the shorts. I don't think it's anything more than that. I think when we look at this, a year from now, I think it's lower. But it's got some positive momentum here right now. So, but I'm not, the play was to own another report, not buying it now. Absolutely not buying it now. Because even if you say, okay, I'd buy in the low eights, well, do you want to buy it now? It's starting to leak it.
Yeah.
So I can't bring myself to play it on the long side now. And it's up 23%. I'll just say I missed it. Move on.
The
I'm moving
news,
on.
the news, Joel, on the 15th of January was that their CFO resigned.
Yeah, they don't like that. But you know what? Comes right back. So, okay, lifting Twitter here. I tried to buy Twitter on this last night. I guess I should have just lifted it at 60, which I could have bought 34.60 right after the report. But I was like, it started to come back in a little bit. I put my bid at 45. I watched it trade 46 in front of me multiple times. And then it took 60 out, then took 70 out. And I was like, I missed it too. So anyways, you'll see that happen all the time. The penny jumping algo is always in front of you. Or not just that, you get off-exchange market makers, even after hours, sneaking in front of you too. So anyway, I missed Twitter too. It was one day of misses for me.
Okay, trading at the highs of the pre-market session.
This obviously up on
Snap. Off the snap, 35.29, only 14 cents above that. You're getting into a big old bar here. This was it had some volatility back in December. If you're looking for another target on the upside, 35.70. That was the high on December 17th here. And also we got earnings coming up on this one. So I don't know if anyone will be wanting to take profits off this news, but 35.70, a target on the upside for Twitter. December 17th high. I've still held on to this one through all the dips and the doodles. Wish I would have sold at 40 and bought more at 30, but holding on to it. 35.70, that's the level I'm keeping an eye on for another target.
Earnings
25 minutes into the show, and we have not mentioned the House of Mouse.
Let's do it. Disney had a good report, objectively speaking, by all accounts. So Q1 EPS from Disney beat the estimate $1.84 versus $1.56. Sales 15.3 versus $15.18 billion. If you've been following the story for the past couple of years, you know that every dip in Disney pretty much stems from Wall Street's concern about ESPN and they're losing subscribers. Well, they talked that up on the call. They said coming up with a direct-to-consumer option is their top priority as a company. ESPN Plus, which is their over-the-top streaming service, has 2 million paid subscribers. The street loved that headline. That was on the call. They gave that. And then, of course, they're launching their Netflix alternative later this year. There's a lot of buzz around that. Maybe they're going to combine that with what they already have with the ESPN Plus. So a lot of good headlines on the direct-to-consumer streaming service side of the business, plus the EPS and the sales beat, and that is why Disney is up here.
They're pulling all the Disney content too from Netflix, are they not? Did they not officially say that?
Oh yeah, they said that last year. That's not going to happen though. I think until
it still hasn't happened though.
No, it's not going to happen. I think if it's this year or next year when that.
But it is going to happen. That is their intentions.
Eventually, yeah.
Disney content off Netflix.
But they have contracts.
Yeah, right. So, and they're getting paid for that. So,
right.
Disney rallied up significantly. It's given a lot of it back. So this isn't like this is a great report because we got over 115 last night, the initial surge, and we've kind of leaked most of it away. So that's concerning in itself because the report was okay, but it's not really taken off. And I mean, it's not the big, great, sexy story here either. Love Disney. I like it long term still, but it's not like, everybody's hungry for these little tech stocks. Everybody's hungry for growth right now. Disney is not, your huge growth stock here. It's $5 or $6 off its all-time high, so it's not cheap really relative to itself. I mean, it's not expensive either. It's just there. So I don't think it's sexy enough to really take off here. I wouldn't be surprised. They're so hungry for growth here, this market, that this is one that they're just probably not that interested in.
Yeah, someone got really excited when they took it up to 115.24 and then slammed it right back down. A lot of price discovery going on here at 113.50 to 113.65 area. That is shaping up as resistance since 6 a.m. this morning. So you got a seller at that area. Let's see if that lines up with any daily highs. Yeah, you got a daily high here, man. There's just a lot here in the 113 handle. There were 1, 2, 3, 4 highs between 1360 and 1392. So let's just round it up. I think if this does not get back over 114 in a jiffy here, I look for a little bit of a fade here in Disney. The closing price for yesterday, you can use as support. That's at 112.66.
Do you know what a jiffy is? Is that in a jiffy, the expression? Have you ever Googled what a jiffy is?
Peanut butter?
Guess again. You know what a jiffy is?
I hope it's nothing.
It's
bad.
when it's
Spencer, do you know what a jiffy is?
Yeah, GIF is a little video clip that loops over and over again.
I think there's actual. Is that what it is?
No, that's not what you're thinking of. I don't know.
I think there's.
I don't know the
It's
answer.
defined as a very short time, but I thought it was a specific. I thought they actually had a specific amount of time. Oh, what is it?
Dennis, man.
Anyways, I should have Googled it myself, but I thought it was an actual like amount.
I don't believe. I don't know. I've never.
A
heard
unit
that.
of time defined by the frequency of its basic timer. Historically, by convention, it's 0.01 of a second.
Okay, today I learned.
There you go. That's high frequency trading talk for you.
That's what. That's
0.01 of a second.
What time did you go to bed last night?
You know what? I just taught you something.
I
I taught you something. 0.0. You now know. You've used that expression for years, and you didn't know what it was. You thought it was.
What do you mean I don't know what it was? In a
Point
jiffy.
zero
That
one of a
means
second.
quickly. It went up quickly in a jiffy. It wasn't 0.01
You know what's
second.
going up quickly in a jiffy? Griffin saying Take Two's back over $98. Hey,
Yeah.
that's
Buy
big. If it can get and hold the 97.57, that's interesting. So this sets up not bad right now. You got a little rally here going in these gaming stocks here. So look at the buy the dippers. They're even in the gaming stocks. Take Two. I like it better. If it stays above 97, guys, I like this thing better. And you know what? The old Jeremy Newsom trick. Sneak its head a little bit below it, hit some stops, and get back above it. That's not that bad of a setup then. So that's kind of what you just need in the market.
Let's
I
go
like
live.
it better now. That
Go
it's trading back
live.
up.
All right.
Maybe somebody
Here.
said something. Somebody say something? This thing just
GM.
blasted off.
GM 143 versus 122.
Well, that's to do with
Yeah.
it too.
General Motors here trading up, just spiked to 40.90, man. And this thing, can it hold in the $40 level? I guess that will be the big thing we need to see.
Somehow we went to GM. I'm not sure.
Well,
they just reported.
Yeah, they're out.
Yes.
They're out right now.
Okay.
Yeah, and the sales beat as well, 38.4 versus 36.55 billion. So beat on the EPS, beat on the sales. That's just out.
Nice pop for GM. Expectations again low here. It's a stock that's been kind of drifting higher here though, and don't call it a comeback, but I guess we can. $32, $31 on the December low, December 26th, now $41, so 10 points higher here. 3.75% dividend. I'm still not interested.
40.50. That was your high back in July when it got real excited. Actually, in June, it went to 45, but it faded hard off that $40 level. So I use 40.50 as long as you're holding above 40.50 here. Some room on the upside. Big news. Was this a guy that there were lower expectations earlier? He gave full year guidance, I think. So nice report here. I don't know. Splashing off to see if anybody wants to do any selling here at 41. Ford's getting a little boost off that. That's trading up 7 cents. Yeah.
Look at that Ford chart just kind of coiling up, ready to explode.
Yeah, looks like it.
You think?
I don't know. I've been thinking that for a while. It just it doesn't go no position here, but I don't know. I mean, the Ford already had their earnings, so I don't know how much of a sympathy play there's going to be there. But just blasting off here, Ford's now over $41. So they like that. Wow. They like that GM report beating on revenues as well as that's a big EPS beat.
Nice move for GM. It's good. It's good. I want GM to come back here. I don't own either of them now, but $4 and $9. If you trade that one, that's going to be your big resistance, big psychological level. I'm assuming I don't even need to look at the book. There'll be stuff there. All right, back to the earnings reports here.
Well, actually, it's 8:34, so let's take a quick break and grab our guest for the day, Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. We'll be right back in a moment with Jonathan. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by Jonathan Corpina, as I mentioned, Senior Managing Partner at Meridian Equity Partners. Jonathan, how's it going this morning?
Gentlemen, good morning.
All right, heavy earnings flow this week and last week. Last week we had tech. This week we have some more tech, but some other industries as well. Give us your top-down thoughts here. What's been your overall impression of this earnings season?
Listen, I think, historically over time, earnings season has always added a little boost to the market and a little bit of confidence. What I like about this earnings season, if we can kind of turn the clock back a little bit, is about a month ago, Apple, came out and started talking openly about how they think tariffs are going to impact their business, impact their earnings and revenue, and how that trickles down to clients. They were the first real major company that really came out and started talking about it publicly. Obviously, everyone's been talking about it. I'm sure they've been talking about it within their boardrooms, but for Apple to come out and make those comments when they did a few weeks ago, I thought that was pretty significant. So in this earnings season here, it's good to hear that kind of, like the feeling is that it's okay to talk about how earnings are going to impact your earnings down the road, how tariffs are going to impact your earnings down the road. And that message that's coming out, I think, is giving investors confidence that, they are looking at this, they are focusing on this. And yes, our economy is getting stronger and earnings season has been somewhat profitable. But we can't ignore the fact that there's this gray cloud of tariffs, the unknown, how it's going to play out, and focusing on what that impact is going to be next quarter, 2 quarters, 3 quarters down the road. So I think managing those expectations of the investors coming out of these earnings call is something that I've been certainly focusing on during this earnings season.
Jonathan, what about the State of the Union last night? Did you watch it, and what were your thoughts?
I did watch. State of the Union is an opportunity for a president to really pat himself on the back and talk about what they've accomplished, what they've done, and what they're looking to do. At this point here, January 2019, we've got an election coming next year, so this is down the road. So it's kind of turning into this area where this is a big political speech where he's trying to really gain the approval and acceptance of the American people. That being said, it was an opportunity for the president to try to bring the parties together, to tear down the lines, to say that we've got immigration issues, we've got economic issues, we've got geopolitical issues that we have to face in this together, and we have to, rid the aisle in the middle of the room and kind of go forth together. That's a message that I think we do always hear coming out of the State of the Union. But clearly, the hot topics of the wall and immigration, tariffs, North Korea, jobs. He hit on everything that we were expecting for him to hit on. Infrastructure bill. It's all stuff that has been in place. The real impact now is, now what, right? We're coming down the deadline for this government shutdown. How is this speech from last night going to impact the parties at the table? I think we're going to need concessions from the Republicans. We're going to need concessions from the Democrats. I don't think we want to go back down the government shutdown road and then have the president flex his muscles and use a emergency situation to build this wall. So I'm hoping that there is some positives that came out of this. I think the smarter people in the room have to really stand up and roll their sleeves up and try to get something accomplished in the next few days.
So with all those negative things overhanging the market, and we just have had an incredible rally here, then that kind of, your persuasion is that, as these things get resolved one by one, hopefully soon, that market just would continue to rally. So people that are looking back, thinking they're going to get another look at the December lows may have to reevaluate that. Is that your outlook?
Yeah, that is my outlook. And if you kind of go back to October, November, the same headlines that we're talking about now are the ones we were talking about then: government shutdown, tariffs, interest rates, the wall. these same things are the same topics. So yes, we had this little downturn in the market, October, November, December, clearly bouncing back up again, pretty significant move that we've gotten to the upside here off of our lows. These issues are going to still be here. It's just a question of how they get resolved and what happens. Do I think that clearly any one of these, 3 or 4 major hot topics can put pressure on our markets? I do, but I think it's going to be more of 2 steps forward, 1 step back. When you strip apart these headlines and you look at our economy and the the earnings of our companies, our U.S. companies, our economy is strong. It continues to be strong. Whether you agree with the president or not last night, when he was stating his numbers, those numbers are the numbers. The jobs numbers have gotten better. Income spending has gotten better. It's easier for small businesses to obtain loans and reinvest in their own infrastructure. We continue to see corporate buybacks increase and using that cash on hand to help build and grow their businesses. I think we're going to continue to see those patterns. That being said, if we have another government shutdown and emergency policy to build a wall, could that add some apprehension to our market? Yes, most certainly. If tariff talks break down, if the president and the SEC continue to go back and forth with each other on rules and regulations, and the Fed with monitoring of interest rates, if that tension continues, yes, this could put pressure on our markets. But I think overall, we're always going to have these negative type of headlines sitting on top of us, but our markets, our economy is strong enough to overcome that.
Jonathan, you're on an institutional trading desk. You're talking to traders every day. What is the general sentiment from your clients right now about the market?
I think it's frustration. And the frustration is that, the market downturned at the end of the year for not any unknown reasons. It was things that we were always talking about, that were always in the forefront, that was always a factor in the markets. But the markets did kind of downturn, pretty significantly towards the end of the year. Now we've bounced straight back up again. Our markets need volatility, and I think the ups and the downs are all part of it. But to see the dramatic moves that we've seen to the downside, now back to the upside. I mean, if you look at the VIX, we were trading where in 30 a month and a half ago or 2 months ago, we're trading at 15 and a half now. When those types of moves happen, I think immediately from the institutional side, they just kind of take a step back out of the market. I don't think big positions are being liquidated at the end of the year, and now size positions are putting back on. I think it's just a lack of participation in our market. And I think that's where the frustration is, because you kind of can't get in the way of these markets, right? When they're moving so strong to the downside and so strong to the upside, it's kind of hard to take the opposite side of that trade. So from an institutional point of view, the frustration of the large volatile swings that we've seen is clearly there. And then once again, I think the frustration is we went down and there was significant pressure on our markets due to government shutdown, tariffs, and debate over interest rates, and now our market is going up significantly over the debate over interest rates, tariffs, and government shutdown. So the no major catalyst for the downside and the no major catalyst for the upside, I think, is what the frustration is really there.
Jonathan, it's not hard to go against these markets when they get going to the trend. It's just always not so profitable when you're trying to buck these trends either on the downside or the upside. The other potential fly in the ointment that you didn't really talk about, the Fed. And it seems like Mr. Powell is kind of backed off here. You see any surprises coming out of the Fed that either help the market or hurt the market?
The Fed has always, and doesn't matter what administration we've seen it do, the Fed has always said that they are going to remain data dependent. And as long as they continue to hold on to that mantra, I think there's going to be no surprises that come out. The issue that we had at the end of the year was that, our president was so vocal and so adamant and out there every single day saying, the Fed is mismanaging this. They should have never raised interest rates. They shouldn't raise interest rates again. The Fed kind of had no choice to do the opposite of what the president was saying, because if they did not raise interest rates when they did, they would have been labeled with, well, you're just the president's puppet and now you're just listening to him. So that last Fed interest rate hike was strictly due, in my opinion, to we need to send a message that we're not going to listen to what the president says and have him dictate what we do. Move forward from there, the Fed then says that they're going to remain data dependent. And if you strip apart everything and look at the data that's there, the data does support that there's no real need to rush into and to continually raise in a calculated pattern our interest rates. So the Fed had an opportunity soon after that to put a pause on raising interest rates. I think they're going to continue to state that they're going to remain data dependent. I think they're going to continue to state that they're going to remain patient because they have to. They've got these things that are really hanging over them that kind of preclude them from making any really big moves. And once again, I keep coming back to the same things. You know, when you're discussing interest rate hikes and how it's going to affect the economy while the government is shut down, and we've got so many workers who are not working, and the ancillary effects of that, it's kind of hard to make a significant move. When we're having conversations about, geopolitical issues and tariffs and the back and forth between the U.S. and China, and not really knowing what those ripple effects are going to be this year, next year, 4 years from now, I think the Fed kind of has their hands tied as to making any real significant moves. So I think from a market movement point of view, I think the Fed has to continue to say they're going to remain data dependent and they're going to remain patient until these issues that we're currently seeing and currently affecting us get somewhat resolved. They're not going to get resolved quickly, but some sort of light, some sort of blueprint as to how tariffs with China are going to play out, I think would help everybody move forward, and that would include the Fed.
Jonathan, I just want to go back to something you said, and we were just looking, at the significant down move that we had and the frustration that you were saying some of your clients had because it was significantly down, and then obviously coming all the way back up with really no real long-term fundamental change other than, the Fed maybe becoming a little more dovish, which is important. But how much do you think of these moves is done just because there's so many trend-following algorithms, momentum-based algorithms out there that are just, the trend starts going down, they start dumping. Yeah. And then the trend starts turning around and they start buying. I'm not talking short term, I'm talking, your institutional algorithms, or a lot of them might be doing a lot of the same things. They're just so much momentum-based trading. Do you think that has anything to do with why we see so much sustained movement in one direction December and in the other direction, exact opposite direction in January?
Yep. I do, and we've definitely talked about this before on this show here. Those types of systems, those types of the logic, they're all reactionary, right? So they're reacting to headlines, they're reacting to market moves, they're reacting to sector moves. So they don't make the decision; they just kind of try to follow and get ahead of what their algorithm is thinking the trend is. Once that happens, you start to get the snowball effect where everyone is trying to leapfrog in front of each other and trying to get that next trade off and that next trade off. And next thing you know, it builds and builds and builds. Now, if you look in, November, December, clearly, we had a bunch of sell programs. We had a bunch of algorithms that were trying to jump across each other. But take the other side of that, when you've got these systems that are out there trying to buy stock and they see this significant pressure and they see this significant snowball rolling their way, they move back. They were bidding a certain number. Now they pull that back 50 cents. They pull that $1 over periods of time, and the liquidity completely dries up. It comes a lack of participation. And I hate to make it sound as simple as it is, but there's more sellers than buyers. The buyers who wanted to buy stock $1 higher now can get it $1 cheaper, and they still think it's going lower. So that's how the algorithms kind of fight and fend off each other. And conversely, it happens on the upside too. I mean, we come in every single day, for the last, 8, 9, 10 trading sessions. Futures don't even have to be up in the morning. They could be flat. They could be down, 6, 7 handles. The market opens. It kind of finds its space. It kind of builds an intraday bottom. And then towards the end of the day, we get a large posted imbalance towards the end of the day, like we had yesterday. There was, a big number of $2 billion to buy on the bell floating around. And next thing you know, the market takes another leg up. It's all reactionary to the way the markets are kind of trading off each other. And that is the frustration because barring any significant news or headlines. Companies' valuations back in October, should be not much different than they are today. But if you look at a chart from where they were then to where they are now, they took a long road down and back up to get back to pretty much the same spot.
All right, we've been on the line for the past 15 minutes or so with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, always great to talk to you. Thanks for the insight, and have a good rest of the week.
Gentlemen, have a great day. Thank you.
All right.
Bye.
All right, 8:50 here. Joel, anything up we should know?
No, we're just that we got a nice little boost off those GM numbers. Now we're trading up $1.75 here. It's 27.32.75, but just on the upside, your pre-market high 35 even, and Tuesday's high, which is the high of the rebound at 27.37.75. I mentioned before, and I mentioned this yesterday, there's not a lot of good daily numbers above here. That doesn't mean we're just going to scream up to 27.70, but there's really no daily highs in here to lead on here as resistance, besides Tuesday's high. I'm looking at Snap here, and Snap's holding on. I don't know if, it's still sellers on strength here, but just kind of a slow leak here. GM had it spurt over $41, got all the way to $41.18, and now it's digesting here at 41 even. Last print is at 40.92.
All right, let's go to Skyworks Solutions. I saw the ticker thrown out in the chat earlier in the hour here, and they reported it after the bell yesterday. This is an interesting one. So, SWKS, their Q1. Hey, Dennis, you're back. Q1 adjusted EPS.
I didn't go far.
This is for Skyworks Solutions, Dennis. Q1 EPS, $1.83, missed the estimate by 2 cents. Sales 972 versus 979 million. So they missed slightly on both the Q1 EPS and sales. The Q2 guidance was light. The Q2 sales guidance was light, and they authorized or they reported $2 billion buyback. And in spite of all of that, we are up.
Okay, I missed which stock you're talking about.
Skyworks.
SWKS. Oh yeah, and the buyback obviously
Right.
driving that. It was a big buyback there. So this was last night, and I was noticing. Yeah. So despite all that, we're up. Expectations again low for this one as well. I mean, all these stocks, they're just finding reasons to buy them, unless they're gaming stocks. We've seen this story here again and again this earnings season. Let's just put it in perspective. Sometimes it's good to take a long-term perspective. We go to each company, we're looking, but really, Joel, I want to know your thoughts on this too. Really, this earnings season, from my perspective, has actually been pretty disappointing. I mean, these numbers, the response has been excellent, but the numbers themselves have not been that great from a lot of companies. They've been okay. Facebook's numbers weren't great. They were okay. It's just the fact that everything was kind of in the gutter. They want an excuse to buy stocks. And if anybody reports anything remotely good, they rally the hell out of it. And we just saw it with Snapchat too. I mean, nothing was that great with that Snapchat report. But you know what? Expectations are so low coming in. It's a stock that hadn't really run up maybe as much as some of these other ones had run. And they're just so hungry for stocks. The response has been unbelievably excellent. But the earnings themselves, you're just taking the numbers, they haven't been that great for most of these companies. What are your thoughts?
Well, some of them are coming from lower expectations. Like
that's what I'm saying.
Yeah. So no.
But just take the numbers. Forget about expectations. Forget about everything else. Forget about the stocks for a second. The earnings numbers themselves. This hasn't been like this has been a
blow it
awesome,
away. No.
Yeah, like
nope.
Blow them away. Yeah, like that every company's just having record earnings and kicking butt. I almost swore on the show. I don't know if they're allowed to say that one. ASS, maybe you're allowed to say that one, but the response has been unbelievable. So it's hard to be short because it seems like they get hit. They come back 3 days later, 4 days later. I don't know what the gaming stocks are, but a lot of them have. And the ones that, like Facebook, that come out okay, or Apple comes out okay, they rally relentlessly. I mean, look at Apple now. Apple is up it was $157 when it reported earnings. It dipped on that initial earnings report down to $151, and then the buyers came in and they haven't stopped for 5 days. It's $175. It's the biggest market cap in the world again all of a sudden. I mean, they're just hungry for stocks.
I think it's just the environment too. I mean, the market has been in a rally mode for January of 2019 and into February. So just the psychology of the market. It's good. It's buying it. We had the decline. Now people are feeling that they missed the dip. The dip that you had, and now it's just the psychology of the market. The numbers aren't super impressive, but the market's in a buy mode, so they're buying stocks. So I think,
and even the ones that miss, like here's Hunter from the chat saying, look at Amazon. Yeah, Amazon missed. It was down almost 100 points on the report. It's got half the losses back in 2 days. Buy the dip is just how Google's down $40. It closed up 20 or something yesterday, or 15. I mean, they're just, even when they get disappointed, they initially get hit. They can turn around these tech stocks and they're just buying them back. This market is just buying in fear now. Anything that dips, they're just out there buying on the dips. And if it rallies, sometimes it just continues to go. So at least on these tech stocks. And like I said, I don't know if it's going to happen with the gaming stocks here today because they are so beat up here this morning with Take-Two and EA being down as much as they are. But I'll tell you, I'm not sure in any of these stocks in the hole here either, because I've seen your face get ripped off. If you're saying, oh, there's going to be some continual momentum to the downside, what tech stock has reported? And I don't know, maybe this has to be a couple out there. What tech stock has reported, got hit, and continued to go lower? I can't think of one off the top of my head. There's got to be a few out there. Can anybody in the chat help out with that? Is there any tech stocks out there that have reported and not bounced back a bit 4 or 5 days later? I mean, Intel was the same story. Intel disappointed like hell. Intel, it's 8-day trading days later, made a new high, made a new 52-week high. It came back 10%, not 52-week high, but a new 6-month high. I mean, this is incredible. The buy the dip is just working like crazy right now.
Michael Pellini, how did Apple go from a horrible quarter to a great quarter? Right? It's going to be a bad quarter, and then boom, they have the lower expectations. So we'll see here, Decio. And just another example of a stock that got hit. I know you're looking for the opposite example.
I can't find the opposite.
Look what they did.
Griffin says he can't find one either. I can't find a tech stock that got hit on an earnings report and didn't bounce back a week and a half later.
What about, and this is the opposite, but Intel.
That's what I just said. Holy cow, Joel, you're getting old. Take your medication. I just said Intel.
You did say it. You say so much, it's hard to keep track of.
Intel, I just said it came back all the way.
All right, okay. All right, we can agree that Intel is rallied. Let's get past get past the Intel. But I'm also looking through my calendar.
What other ones though? There's other ones.
AMD, Nvidia, all of them. Micron, all of them.
Nvidia, same thing. Same story. Nvidia, all the losses back. 1, 2, 3, 4, 5, 6, 7 days later. AMD rallied on its report, right? Micron, did that get hit on its report? Western Digital got hit in the after hours that day. Remember, down to 37, and then they rallied the hell out. Seagate yesterday. Wasn't Seagate yesterday or 2 days ago? It was all the way down to 43, all the way back. 1 day, not even 1 hour. 1 hour trading bought all the way back. BTFD is at its, I'm almost going to say, the BTFDers are almost stronger than they've ever been right now. Like we saw it for years, from 2016, 17, 18, every time the dips, they're just coming and buying and buying. Right now, they don't even wait. They're buying them back within hours. Tesla, you said that one this morning.
Yep.
That wasn't, well, that wasn't earnings, was it? That was the CFO departure. Oh, it was the earnings call.
Yeah.
They dipped that. Look, 6 days later, 7 days later, all the way back. It's crazy.
What about Qualcomm?
Yeah, well, I own that one.
Hey, I got one.
It's trying. It's turning a bit. You know what? It's trying a little bit. It's actually, well, it wasn't. I don't know if it got hit on its earnings report. It just leaked because there was other reasons.
Short report. There was a short report.
Oh yeah, the short reports. That was a different story. It wasn't off earnings, but even it's starting to show some life. I mean, wow, this is impressive. It's impressive that all these stocks. Intel, the one Intel is really impressive, Joel. And you said it too. Unbelievable. And it was in the doghouse for 4 or 5 days, and then 4 days ago, it was $46. Now over $50. Crazy.
Yeah,
PayPal, great one. Go for the W. PayPal, PYPL, same story. Got hit, down to $86. Here it is, 4 days later, $92. It's downgraded today, so it's going to be down here this morning. Guggenheim downgrading it, but wow. impressive moves. Buy the dip. I guess that's the strategy that's working. I don't know if it's going to continue to work, but it makes me not want to short EA and not want to short Take Two.
All right, real quickly, let's just I'll do some earnings or some ratings real fast, and then as far as the earnings after the bell, who are we looking at this afternoon, guys? Well, it's today, Wednesday, so I'm looking at GoPro, O'Reilly, MetLife. Not too much happening after the bell.
CMG.
Chipotle after the bell.
Yeah.
Big one.
Missed that one.
Yep.
Okay. And then as far as ratings today, not a lot. We mentioned a couple. We mentioned the Guggenheim downgrade of Match. Not a ton in the way of notable upgrades or downgrades this morning. Citigroup upgrading like Mason, I believe that's off earnings. Church and Dwight, they may have had earnings too because they've got a couple upgrades here this morning as well. Not light on the earnings on the rating side. PayPal we just mentioned at Guggenheim as well, but light on the rating side today. But that is going to wrap it up for our show today. Thanks to our guest Jonathan Corpina. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. If you missed any part of our show, catch our podcast. We are on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Please remember all the information from our show is for informational purposes only and not meant to be investing advice. On Thursday's show, tomorrow, we'll be joined by Mark Chaikin, the founder of Chaikin Analytics. In the meantime, everyone, have a good day, and we hope we see you again tomorrow.